You can toe the line when it comes to investing. Choose the stocks you like one by one. Or select Sector Spider ETFs and add the diversification of an entire sector of the S&P 500, like financial. With liquidity, all-day tradability, and transparency. Ready to add diversification to your equity investments? Before investing, consider the fund's investment objectives, risks, charges, and expenses. Go to sectorspiders.com for prospectus containing this information. Read it carefully. Visit us at sectorspiders.com.
Welcome to Marketplace Minute. I'm DeLegge with ETF Guide. What does an optimally designed investment portfolio look like? It's a great question. Well, I want you to think about it in this way. In terms of core portfolio and non-core, of course the non-core complements the core. So think about the core of your investment portfolio as the foundation of a house. Now the foundation obviously has to be on a solid footing, and the core of the portfolio should be likewise on a solid footing of low-cost exposure to all the major asset classes or investment categories. Now think about when we say asset classes, we're discussing things like stocks, bonds, cash, real estate, commodities. These are asset classes, and having a core portfolio that owns these asset classes is a smart way to build your portfolio. So that's where ETFs come in, because there are ETFs that touch all of these major asset classes in a very efficient, low-cost manner. I'm going to throw a couple of ticker symbols at you, ETFs that would work well for an investor's core investment portfolio. Ticker symbol SCHB, which is a Schwab ETF that offers core exposure to the broad U.S. stock market. Now, SCHB is great because it offers exposure not just to large company stocks, but also some of those mid-size and smaller company stocks. It's broad exposure to the entire U.S. stock market. So that would be a great fund for the U.S. stock portion of a core portfolio. Another example would be ticker symbol VNQ, which is a Vanguard REIT ETF. Now, REIT stands for Real Estate Investment Trust. These are companies that invest and develop real estate properties. They manage, they lease, they build real estate properties. So this could be another way to get low-cost core exposure to REITs or real estate. So again, think about the core of your portfolio as being built on a solid foundation. The non-core part of the portfolio complements the core. What would be non-core investments? Things like actively managed mutual funds, hedge funds, maybe even individual stocks. Again, those are the non-core components or portions of your investment portfolio, using those to complement the core of your portfolio. And the core, again, should always be built on a solid and strong foundation of low-cost, efficient index funds or index ETFs. Well, that does it for another episode of Marketplace Minute. I'm DeLegge with ETF Guide. Thanks for watching.